Hello everyone, welcome to the Ichimoku charts.com daily analysis for the US dollar index for Tuesday, January the 5th, 2010. Well, a continuation of the first time frame downtrend with the market making a lower high and a lower low. The previous day we had an outside day in bar chart terms, and the day before that established the downtrend in the first time frame with a lower high and a lower low. So we have a continuation of that trend to the downside. Having said that, though, we have a fairly bullish candle. We have the market closing up towards the high, which tells us that the bulls have closed in control, and they've shown some commitment to taking this market higher throughout the trading day. The bears tried to take control of this market, and they certainly lost commitment, and the evidence of that is this fairly long shadow on the bottom of the candle. The bears were actually strong enough to take out the previous candle's low, but the buyers came back in. The bears lost their commitment, and the buyers closed the market back up towards the high. Just looking at this in terms of a trend line and a trend channel, we have a downtrend in place with a series of lower peaks and lower troughs. So here you have a peak, a trough, a lower peak, and a lower trough. That was established yesterday. This downtrend continues, that second time frame downtrend. We're able to draw a trend line, and once we have establishment of that trend, we were able to draw a trend channel, and trend channels tend to act as areas of support and resistance, and in this case it's acted as an area of support for the market. So as the market tried to trade down through that trend channel, the buyers came back in and bought the market back up. And also this area here around the lows of these two candles, there was certainly buying coming in. Just interestingly, looking at the characteristics of all of these candles that are trading within this flag pattern, we also identified this to be a flag pattern. We have buying coming in every time this market sells off, and we can see the long shadows on the bottom of these candles here. The buying coming in, there's a bit of buying there, a lot of buying here, an indecisive candle, strong buying, fairly strong buying, and strong buying again. So this is a market that, even though it's trading off, it's not trading off substantially, and there is very strong support from the buyers as the market does continue selling off. That could be a sign that the market may break out to the upside. Although having said that, we do have some shadows on the top of these candles here as the market has been trading up towards the top of the barrier of the flag pattern. So the only way that we're going to trade this flag pattern is when we actually get the breakout, and that could be to either side, either to the downside or the upside. Flag patterns tend to be continuation patterns, so it's more likely that the market will break out to the upside. But there is still a possibility that it could be a reversal and the market could trade back down to the downside. That's a thing that we need to realise with patterns, that we need confirmation of those patterns. We shouldn't try to preempt them, and we really shouldn't be thinking of taking any positions while the market is trading within the pattern. And also, when a market breaks out, what we want to see on the breakout of the pattern is if the breakout's to the upside, we want to see a strongly bullish close up above the barrier of the pattern, or if the breakout's to the downside, we like to see a strongly bearish close below the bottom of the pattern. So we just need to be patient and wait for this market to develop. Now, in Ichimoku charts terms, we are trading up above the cloud or the Kumo, so that is a positive for this market. That tends to suggest that the market may be more likely to break out to the upside and the uptrend continue on its way. The market is also trading up above the Kijun-sen, and that's a positive sign for this market. That's a bullish sign, but the Kijun-sen has turned flat, and that's why the market is retracing back towards it. So if we get a bit of upside momentum in, then that Kijun-sen will start to turn up, and that will be the end of this equilibrium, or potentially the end of this equilibrium that the market was in. Having said that, though, the market is trading down below the Tenkan-sen, which reflects the trend and equilibrium in the very short time frame, and the market is trading down below that, and that indicator is pointing down, which reflects some downside momentum in this market in the short time frame. So that's a negative in the short time frame. the market has retraced back up towards that area, and there has been a little bit of buying coming in as the market tried to trade up around that area. So if we see a bullish close up above the Tenkan-sen, that could be a sign that the market might attempt to break out above the top of the flag pattern that we have here. We also have a fairly strong resistance area at 78, so there is potential for the market to hold up around that region, and if the market does break out, the upside potential is immediately limited by the area around 78.94, which is potential resistance. If the breakout is to the downside, we did identify the Kijun-sen as potential support, and then also down around the cloud, which is around the 75-76 region. So there is strong support on the way down. So we just need to be patient, wait for a breakout in either direction.